Imagine going to sleep as the undisputed master of the world, the richest, most powerful nation on the planet. Soldiers in dozens of countries, warships on every ocean, a currency so trusted that the whole world traded in it. Now imagine waking up 11 days later to find you're completely broke, stripped of power, and taking orders from someone else. In the fall of 1956, the British Empire experienced exactly that. In less than 2 weeks, the nation that had conquered the globe was publicly humiliated and brought to its knees, not on a battlefield, but in a boardroom. If you read the standard history books, they'll tell you the Suez Crisis was a military blunder, a miscalculation by out-of-touch generals drunk on nostalgia. But here is what they don't tell you. Britain didn't lose a military war in 1956. They lost a financial one. The real story of the British Empire's collapse isn't about troops or tanks. It's about decades of reckless overspending, a crippling addiction to debt, and a dangerous illusion of power that masked a rotting economic core. Welcome to History ReBeating. Today, we're dissecting the anatomy of an empire's collapse, because Britain's fatal mistake wasn't just a localized tragedy from 70 years ago, it's a blueprint, and right now the United States might be following it, step by step, straight toward its own devastating Suez moment. Part 1. The illusion of power. To understand the trap America might be walking into today, we have to understand the trap Britain built for itself, brick by brick, loan by loan, over the course of 30 years. After World War II, Britain still looked like a superpower. They had a massive global military footprint stretching from Hong Kong to the Caribbean. The British pound was still a major reserve currency. The politicians in London still spoke with the swagger and authority of world conquerors. Churchill's portrait hung in every embassy. The maps were still painted red. But it was a mirage, a beautiful, carefully maintained mirage. Beneath the polished uniforms and imperial arrogance, the British economy was surviving on life support. They had borrowed astronomical sums of money to fight 2 world wars in 30 years, racking up a debt-to-GDP ratio that was mathematically unsustainable. Their industries were outdated. Their infrastructure was crumbling. Rationing of basic goods didn't end until 1954. 9 years after the war. 9 years. And yet, instead of shrinking their global footprint to fix their economy at home, they kept spending. They kept pretending. They continued projecting power they no longer had, because admitting weakness felt worse than the debt itself. They were living on borrowed time and borrowed money. Sound familiar? Today, the United States is carrying a $34 trillion national debt, a number so large it's almost meaningless to say out loud. We maintain over 750 military bases across 80 different countries. We are funding proxy, wars, policing global shipping lanes, and projecting power on every single continent simultaneously. Just like Britain in the 1950s, the US government projects an image of untouchable strength. Politicians on both sides of the aisle speak with absolute confidence about American dominance. But when you look at the math, really look at it, that strength is entirely dependent on foreign creditors continuing to buy American debt. We are a superpower operating on a credit card, and that credit card is maxed out. Part 2. The crisis arrives, every illusion eventually meets reality. For Britain, that collision arrived in July 1956, when Egyptian President Gamal Abdel Nasser made a bold and dramatic move. He nationalized the Suez Canal, the most critical economic artery in the British Empire. Roughly 1.5 million barrels of oil and 1.5 billion pounds in annual trade passed through that waterway. It wasn't just a canal, it was the jugular vein of British commerce. Britain's Prime Minister, Anthony Eden, reacted with pure imperial hubris. He didn't look at the country's balance sheet. He didn't consult the treasury or ask what this would cost. He looked at Britain's long history of dominance, decided this was an affront to national pride, and declared, "We will take it back by force." Together with France and Israel, Britain launched Operation Musketeer, a massive, coordinated military invasion. And militarily, it worked. British paratroopers dropped into the Canal Zone. Naval forces seized the waterway. They had the canal back in a matter of days. From a purely tactical standpoint, it was a success. But they forgot one crucial, fatal detail. They were fighting with someone else's money. The United States, led by President Dwight Eisenhower, was furious. He hadn't been consulted. He feared the invasion would push Arab nations toward the Soviet Union at the height of the Cold War. He needed it stopped immediately. And Eisenhower knew exactly how to stop Britain without firing a single bullet. He didn't send aircraft carriers. He didn't make military threats. He threatened them with the bond market. Specifically, Eisenhower threatened to sell off the US government's massive holdings of British pounds on the open market. In the geopolitical economy of the 1950s, a US sell-off of sterling would trigger a currency collapse. The pound would go into freefall. Britain wouldn't be able to import food or medicine, let alone fund an active military operation. There was also the IMF card. Britain desperately needed an emergency loan to stabilize the pound, and the United States had the power to block it. Eisenhower made it crystal clear: no ceasefire, no loan. In a matter of hours, not days, not weeks, the British government realized the horrifying truth. They weren't an independent superpower anymore. They were a debtor nation, and their creditor had just called the loan. Humiliated and financially cornered, with their economy on the brink of collapse, Britain ordered a full withdrawal. Within 48 hours, the invasion was over. The empire was over, not because they lost a battle, because their check bounced. Part 3. The American Parallel, which brings us to right now. For the last 80 years, the United States has played the role that Eisenhower played in 1956, the creditor, the enforcer, the nation that could end a conflict not with bombs, but with a phone call to the bond market. The US dollar's status as the world's reserve currency gave America what economists call the exorbitant privilege, the ability to print money, run enormous deficits, and weaponize its financial system through sanctions and asset freezes. But what happens when the rest of the world decides they've had enough of that privilege being used against them? Right now, nations around the world, led by the BRICS alliance of Brazil, Russia, India, China, and South Africa, with more joining every year, are actively hoarding gold and settling bilateral trades in their own local currencies. China and Saudi Arabia are conducting oil deals in yuan. Russia and India are trading in rupees. These aren't isolated experiments. They are the construction of a parallel financial architecture specifically engineered to route around the US dollar. Meanwhile, Washington continues to act like Anthony Eden in 1956. We respond to every geopolitical flashpoint in Eastern Europe, the Middle East, and Asia with absolute financial confidence. We sanction nations, freeze sovereign assets, as we did with $300 billion in Russian reserves in 2022, and print trillions of dollars to fund overseas commitments, all on the assumption that the world will just keep buying American debt forever. That assumption is becoming harder to defend. Foreign ownership of US Treasury bonds has been declining for years. The dollar's share of global reserve holdings has dropped from over 70% in 2000 to below 60% today. These are slow-moving trends. But in financial history, slow-moving trends are exactly what precede sudden, shocking crises. The British Empire's debt problem didn't develop overnight. It built over decades. And then, in 11 days, it all came due. Conclusion. When the moment arrives, America's Suez moment likely won't be a catastrophic military defeat in the Pacific or a dramatic missile strike. It won't announce itself with fanfare. It might happen in the bond markets, quietly and then all at once. It might be a day when a major geopolitical crisis erupts, perhaps in Taiwan, perhaps in the Middle East, perhaps somewhere we're not yet watching. The United States might move to project its power, deploy its financial leverage, and threaten consequences. And the response from Beijing, Riyadh, Moscow, and their allies might be different from anything we've seen before. Instead of backing down, they might say, "We are no longer buying your debt. We are selling your bonds. We are dumping your currency." In that moment, the US might face the exact same impossible choice Britain faced in 1956. Continue the confrontation and watch the dollar collapse, or back down and reveal to the entire world that the emperor has no clothes. That the mightiest nation on earth is, in fact, a debtor nation that cannot afford a real fight with its creditors. When that day comes, the illusion of American financial invincibility might shatter just as quickly as Britain's did in 1956. And just like Anthony Eden, whoever sits in the White House will realize the country is no longer dictating terms to the world. It is begging its creditors for mercy. History is not a random sequence of events. It's a rhythm. It's the same human psychology, the same political hubris, and the same brutal mathematical realities playing out over and over again on different stages, with different actors, in different centuries. The British Empire ignored the math, and they lost the world. Not in a great battle, not with a bang, but with a phone call, a currency sell-off, and the quiet withdrawal of an overextended army from a canal it could no longer afford to hold. Today, the United States might be standing on the exact same precipice. The debt is real. The overextension is real. The challenge to dollar dominance is real. The only question that remains is, when does the illusion finally meet the math? You can't control what the politicians in Washington choose to do, but you can understand the historical forces at play, recognize the pattern before it fully unfolds, and position yourself wisely for when the bill finally comes due. Because if there's one thing we know for certain on this channel, history doesn't just repeat, it rebeats.